please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
TCS Board on Friday approved a big buyback of 16,000 crore rupees at a price of 2,100 rupees per share. But what does this mean for retail investors? Nigel is here with the math behind it. Nigel?
Well, let's first focus on the basic details that we have. 16,000 crores is the total amount, and the max buyback price that they're talking about, or the buyback price that they're talking about, is around 2,100 rupees on a per share basis. But what does this mean? Remember, there's a SEBI mandate out there that if you're a small investor, what is the definition of that? That's if you're holding shares worth 2 lakh or less, then in fact 15% of this total buyback amount is reserved for you. So 15% of around 16,000 crore rupees means that around 2,400 crore rupees are reserved for those small shareholders. To be a small shareholder, you have to qualify that in fact the total value of your holdings is less than 2 lakh. So just going by the current scenario, the current price is around 1,840 rupees odd. So you'll have to buy around 108 shares as of today at a price of around 1,840 to qualify under this 2 lakh odd. So this is the scenario basically that we're assuming. Now, if this happens, then you'll say, what exactly is the acceptance ratio? So assuming that, you have the buyback price at around 2,100, you bought it around 1,840, and assuming 50% of what you buy, that gets tendered into the buyback, then your break-even point comes in at around 1,800, 1,580. If in fact 75% gets taken in there, then in fact your break-even price falls even further to around 1,060. And finally, if 90% gets bought back in the buyback at around 2,100 rupees, then your break-even price falls all the way to around 500 rupees on a per share basis. Remember, we're explaining these scenarios because the last time almost all your shares got bought back. That is 100% got bought back. Now, we're not sure about what is the gains, but we want to alert our retail audience that there'll be a cost that will be associated. Point number one, there'll be a transaction cost. So at least you'll have to spend at least 1,000 rupees on the buying as well as tendering in of these shares. It can be around 1,000, 1,400 rupees. So one factor is the transaction cost. Second is, when you're looking to buy shares worth around 2 lakh rupees, you'll have to borrow that money and then buy it, right? So there'll be either an opportunity loss or there'll be a borrowing cost. So you're assuming these three scenarios that you're holding it for around 3 months because the process takes around 3 to around 3.5 months. At around 8% if you're borrowing, then 4,000 rupees is the cost. If you're borrowing at around 12%, then it's around 6,000 rupees. So there are various costs that you have to factor in as well. And finally, assuming you're making some money, if you make 27,000 in this buyback, assuming all your shares get bought back and you get 250 rupees or thereabouts, then you'll have to pay short-term capital gains of around 4,050. And suppose you're making around 16,000 rupees, then around 2,400 rupees is what your short-term capital gains tax will be. So let's stack these numbers up for you. We don't know what the gain can be, but we have to alert our viewers there'll be a cost that will be involved. One is your transaction cost. Second is your borrowing cost. That will be roughly around, we're taking it at around 5,000 approximately. And there'll be a short-term capital gains as well that you'll have to pay. That's a tax. So effectively, nearly around 8,000, 8,500 rupees is the effective cost to you. And finally, I just want to alert our retail audience out there. Those that got bonus recently, they may go and say, wow, let's go and tender all these shares in the buyback. Remember, there's a bit of a taxation clause out there as well, because the cost of acquisition effectively is nothing. And if all your shares get bought back at around 2,100 rupees, then your effective tax will be 315 rupees odd. We'll have to wait by to know exactly what is the acceptance ratio of retail, but just putting out broad details in particular for our retail audience. Back to you, Rima.